Bitcoin has experienced a significant downturn. Since peaking at around $126,000 in October 2025, Bitcoin's price has fallen nearly 50%, trading in the $60,000 $70,000 range as of mid-February 2026. This drop appears driven by a mix of macroeconomic pressures, investor deleveraging, and shifting market sentiment rather than fundamental flaws in Bitcoin itself. Primary reasons for the crash include broader market dynamics, strong U.S. economic data, rising bond yields, a stronger dollar, and risk-off sentiment in stocks, especially tech, have contributed, alongside outflows from Bitcoin ETFs totaling billions and forced liquidations from over-leveraged positions. Future downside risk exists, but recovery potential is debated. Analysts suggest the price could dip further to $50,000 or lower if macro conditions worsen, potentially signaling a prolonged crypto winter. However, historical patterns and maturing market factors like institutional adoption may limit the severity, with some forecasts pointing to a rebound toward $100,000 by year-end. Investing now carries high uncertainty. Evidence leans toward viewing this as a buying opportunity for long-term holders, given Bitcoin's past recoveries from similar corrections. That said, short-term volatility remains elevated, and it's wise to approach with caution, diversifying and only allocating what you can afford to lose amid ongoing economic shifts. Understanding the crash. Bitcoin's recent price action reflects a confluence of global financial trends. For instance, the nomination of Kevin Warsh as Federal Reserve Chair has raised expectations of tighter monetary policy, which typically pressures risk assets like cryptocurrencies. Combined with tech stock sell-offs and precious metal volatility, this has amplified the downturn. Research from sources like VanEck and CNBC highlights orderly deleveraging rather than panic selling, suggesting the market is resetting rather than collapsing. Weighing future possibilities. Looking ahead, predictions vary based on sources. Bullish views from platforms like Binance anticipate averages around $112,000 by late 2026, driven by potential ETF inflows and halving cycle effects. Bearish outlooks, such as from Bloomberg Intelligence, warn of drops to $10,000 if investor faith erodes further. The evidence suggests a likely consolidation phase, with upside if U.S. policy turns crypto-friendly under the Trump administration. Investment considerations. If you're considering investing, historical data shows that buying during 30–50% corrections has often led to strong returns over multi-year horizons. However, current conditions, like ETF outflows and macro headwinds, imply waiting for stabilization around key support levels, e.g., $60,000, could reduce risk. Always consult professionals, as cryptocurrencies remain speculative. For more details, including supporting links, CNBC on ETF flows and crypto winter fears, VanEck on deleveraging triggers, Bloomberg on price warnings. Welcome to Joseph Markets, your go-to source for insightful finance videos powered by cutting-edge AI analysis. Today, we're diving deep into one of the hottest topics in the crypto world. Why is Bitcoin crashing, with its price dropping significantly? Is there a chance it could go even lower in the coming months? And most importantly, should you invest in Bitcoin right now, in February 2026? If you're feeling the pain of this market dip, or wondering if this is your golden opportunity to buy in, stick around because we're breaking it all down with facts, expert insights, and real data to help you make informed decisions. But before we jump in, if you want 100% true news, accurate market breakdowns, and correct financial advice tailored for everyday investors like you, hit that like button, subscribe to Joseph Markets, and drop a comment below saying Joseph Markets to join our community of savvy finance enthusiasts. Your engagement helps us bring you more high-quality content like this, and who knows, your comment might get featured in our next video. All right, let's start with the hook. Imagine waking up to find your Bitcoin investment halved in value almost overnight. That's the reality for many holders right now, as Bitcoin has plummeted from its all-time high of over $126,000 in October 2025 to hovering around $60,000 to $70,000 in mid-February 2026. It's a staggering 50% drop, wiping out trillions in market value across the crypto space. But why is this happening? Is it just another volatile swing, or the start of something bigger like the infamous crypto winter we saw in 2022? And could this be the perfect storm for savvy investors to load up, or a warning to stay far away? By the end of this video, you'll have a clear picture, backed by reliable sources, so you can decide for yourself. Let's unpack this step by step. First, let's address the elephant in the room, the reasons behind Bitcoin's current crash. This isn't random. It's a perfect storm of macroeconomic factors, market mechanics, and shifting investor sentiment. According to CNBC's report on February 15, 2026, the Bitcoin price crash has stoked fears of another crypto winter and shaken faith in Bitcoin as a store of value, especially under a crypto-friendly Trump administration. They note that since the all-time high last October, Bitcoin has lost almost half its value, with a 25% drop in the past month alone. Much of this pressure comes from long-term crypto investors trimming their positions after years of accumulation. Expanding on that, VanEck's analysis from February 5, 2026 explains that Bitcoin's February sell-off reflects orderly deleveraging rather than outright capitulation. Despite a roughly 20% year-to-date decline, leverage in the market has been reduced meaningfully. They point out that Bitcoin has fallen about 19% in the past week, trading in the mid-60,000s, with futures open interest dropping from $61 billion to $49 billion, a 20% decline in notional exposure. This deleveraging is a healthy market reset, flushing out over-leveraged traders without causing total chaos. CNN Business, in their February 5, 2026 article, adds that Bitcoin is acting weird, tumbling 44% from its October peak and falling below $70,000. They highlight how Bitcoin isn't behaving like digital gold anymore, as gold has risen 24% since October, while Bitcoin has dropped 50%. This divergence underscores doubts about Bitcoin's role as a safe haven, with the crypto getting swept up in broader risk-off sentiment amid market fears. Bloomberg intelligence strategist Mike McGlone warns in a February 16, 2026 piece that the cryptocurrency market bubble is imploding, with Bitcoin potentially falling another 85% to $10,000. Factors include surging stock markets with low volatility and waning faith in President Trump's crypto boosterism. Investors have dumped $678 million from Bitcoin ETFs in February, extending a $6 billion sell-off since November. Barron's reports on February 17, 2026, that Bitcoin is struggling to break back above $70,000, with a cooler-than-expected reading sparking interest in risk assets but not sustaining crypto gains. YouTube channel Why is Bitcoin Falling? 2026. Crash Explained from February 10th suggests the crash follows a historical pattern: 365-day bear markets, with February often trapping investors, May worsening, July rallying, and October forced November bottoming. If history repeats, we might be only 30% through this correction. Al Jazeera's February 6th article attributes the fall to volatility in other markets, a sell-off in global stocks, and Trump's nomination of Kevin Warsh for Fed chair seen as hawkish and likely to keep interest rates high, which hurts crypto. CoinDesk on February 17th notes Bitcoin slipping below $67,000 alongside a rout in software stocks. With the IGV ETF down 32% since October, Bitcoin is increasingly seen as just software, threatened by AI advancements. The Motley Fool's February 13th piece calls this Bitcoin's seventh largest drop in history, potentially following its 4-year cycle, where prices peak post-halving then correct. Self-fulfilling prophecies from long-term holders front-running expected drops add pressure. Forbes on February 17th warns of more crash fear amid U.S. dollar strength and Ray Dalio's world order breakdown concerns, with Bitcoin down over 50% from its peak. YouTube's The Bitcoin Sell-Off No One Is Explaining from February 9th points to 3 triggers: institutions, tighter conditions, and forced selling. Mashable's January 29th article, Early Warning, ties the plunge to stock market dives, especially tech like Microsoft, with crypto as a riskier bet taking bigger hits. AMB Crypto on February 17th notes institutional balance sheets expanding but price momentum fading, with Bitcoin down 20% for the quarter, potentially its weakest Q1 in 8 years. Reuters' February 5th report details Bitcoin plunging amid weakening risk sentiment, driven by precious metals volatility and tech sell-offs, falling 12.6% in a day. BBC on February 6th says the drop was triggered by Warsh's nomination, with negative sentiment growing as traditional investors lose interest. Standard Chartered slashed its 2026 target to $100,000 on February 12th, warning of capitulation to $50,000 due to ETF outflows and weaker macro backdrop. Investopedia's February 5th piece calls it crypto winter, with $500 billion wiped out in a week, attributing it to profit-taking and fewer new ETF buyers. Interactive Brokers on February 6th explains the drop via institutions, tighter conditions, and forced selling, not a broken long-term story. X posts echo this. Tether USD bridged Z20 on February 15th lists strong data, rising yields, liquidations, and regulation. DeciVibes 360 on February 6th ties it to Warsh. Ansari Sahab live on February 5th covers liquidations. Guru Investing on January 30th lists 7 shocking reasons including macro and policy. So, now, moving to the next big question. Is there a possibility of Bitcoin going down further in the future? Absolutely, and the risks are real, but so are the recovery scenarios. Let's break this down. Standard Chartered's Jeffrey Kendrick warns of further capitulation in the next few months, potentially to $50,000 before recovering to $100,000 by year-end. Bloomberg's McGlone sees a drop to $10,000 amid a narrative crisis. The Motley Fool suggests months before a cyclical low, but factors like institutional adoption could shorten it. YouTube's crash video implies we're early in the correction, with potential lows in October-November. CoinDesk ties future drops to software stock routes, as Bitcoin correlates with tech. Barron's notes Standard Chartered's lowered target, predicting drops if risk appetite weakens. History from past cycles, 78-86% drops over 365 days, suggests possible lows around $35,000–$40,000 per ex-user Philocone, though market maturity, ETFs institutions, might break this pattern. Renegade TV counters that old patterns are dead, with drops more likely from rotation to utility coins like XRP. Bullish forecasts temper this. Binance projects $112 to $470 average for 2026. Kraken's tool with 5% growth sees $70,960 by end 2026. Traders Union forecasts $96,532 by end 2026. Axie sees $100,000 to $230,000. CoinCodex predicts $78,708 in 2026. FlitPay estimates $115,600 average, up to $178,200 high. YouTube's Altcoin Daily has $180,000 bull case. Finder.com's experts average $133,688 end 2026, up to $695,182 by 2035. AI from Finbold predicts $72,300 by March 1st, 2026. Yahoo Finance's January 19th piece has Kendrick seeing 55% surge potential in 2026. Investing.com's February 17th forecast sees oscillation between $66,000 and $74,000, with upside to $85,000 if $75,000 reclaimed, or downside to $50,000. Trading Key discusses U.S. Strategic Reserve holding $15 billion in Bitcoin, potentially stabilizing prices, with J.P. Morgan targeting $170,000, $266,000 long-term. UHodler's February 9th prediction, moderate increase to $74,500, $76,000, then decline to $62,500, $65,000. X posts like Jasneet Singh Saini's futures trading, Schmidt's profitable predictions, GlowFi's derivatives, Nixie's prediction markets, Fakao Flinch's market explanation, Takara Coin's BlockDAG outlook, ArtVision NFT's limitless guide, the Bitcoin Libertarians' institutional adoption talk, Alan Crypto's Cathie Wood 1.5 high monitor bull case, Crypto News Hunter's 120K bet, all suggest varied futures but potential upsides. Finally, should you invest in Bitcoin now? This is tricky. It's not financial advice, but let's weigh pros and cons with data. Pros. History shows buying dips rewarding. Motley Fool notes past recoveries from 50% drops. CNBC's February 5th advisors say hold if long-term belief strong. Yahoo's Bitcoin versus iShares Trust sees 17,000% 10-year return, still impressive. Charles Schwab views it speculative but with potential. VanEck sees orderly dip as entry point. Reddit's Bogleheads exposes myths, but long-term holders win. YouTube's Watch This Before You Buy says, consider if bottoming. Kraken, Axie, CoinCodex forecast growth. Quora says 2026 good due to adoption. RNZ's February 10th calls bargain after halving. 24/7. Wall Saint suggests alternatives, but Bitcoin core. XTB warns but sees rebounds. Motley Fool's February 10th says panic or buy. Choose latter if convicted. Zacks prefers Bitcoin holders. Kiplinger's January 13th believes resume winning. Cons. More pain possible. Motley Fool warns falling further. CNBC experts cautious amid sell-off. Nasdaq says buy direct, not via companies. YouTube explains risks. Schwab highlights high risk. Bitcoin Magazine warns $50,000 next. Morningstar UK notes volatility, outflows. Quora advises but with caution. RNZ questions buy. 24/7 Wall Saint notes 22% YTD drop. XTB sees $10,000 risk. Motley Fool's crash questions buy. Zacks faces pressure. Kiplinger notes volatility. Balanced view. If horizon 5+ years, current levels attractive per cycles. But if short-term, wait for stability. Diversify, use dollar cost averaging. As X's Flomo says, watch levels. Hold 80K for rebound. Break below for deeper dip. In conclusion, Bitcoin's crash stems from macro pressures and deleveraging, with further downside possible but recovery likely long-term. Investing now? Promising for believers, risky for others. Thanks for watching Joseph Markets. Remember, like, subscribe, comment Joseph Markets for more. Stay informed, invest wisely.